you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to Morningstar. I'm Emma Wall and here with me today is Simon Hillenbrand, Head of UK Retail for Henderson. Hello Simon.
Good morning, Emma.
So let's talk about cash. Along with property, it seems to be the most favoured asset all other among UK consumers. How bad is the problem?
Well, we've done some work in conjunction with some outside parties and we think it is quite a big problem, in fact. We reckon that the UK's investable wealth pool is around £1.4 trillion in size. And the study that we've done would indicate that well over half of this is currently held in cash. So that is people having money either in cash ISAs, but largely in short-term deposits, the vast majority of which pay well under 1% in terms of interest.
And that's the thing, if you just look at the basics and take out the human factor, it seems crazy that all this money is in products that barely manages to give you any sort of return. I mean, I know inflation is very low at the moment, but it's not going to be low forever, and it hasn't been that low in the recent history, which means for a lot of people they've actually been losing money in real terms, and yet that doesn't seem to have been enough of an impetus for them to take on a little bit more risk for considerably more return.
No, and I think we have to be very careful here. People are generally, I think, cautious by nature. They've had possibly some bad experiences in the past of investing in the markets, and this is absolutely not about telling people they need to suddenly load up on risk, but the risk of holding a lot of cash in a very, very low interest rate, very, very low return environment when other alternatives exist, such as equity or income from equities, for example, or income from property or fixed income, does need to be considered, we believe, because this is an opportunity foregone. People could be doing more with their cash, putting it to work to generate income, which currently is just passing them by. We've also found, rather disturbingly, that a lot of people don't actually know the interest rate that they do receive on their cash deposits. So I think there's a general, in many cases, I think it's fair to say that whilst people do need to provide for the rainy day, they need to repair the roof or the car, at the margin they probably have too much in cash, which could be perhaps better deployed.
I mean, it does call into question the concept of risk. Risk really is losing money. And if inflation ticks up any more, then you're actually doing that in cash. Whereas, what are traditionally thought of as risk assets could arguably be a safer place to be.
Yeah, I mean, again, the big caveat here is that everybody's circumstances are different. Human psychology is what it is. Everybody has their own view. But I think you're absolutely right, with very, very negligible interest rates, and when you take tax into account as well on cash deposits, you're absolutely right. This is income that is foregone that could be taken in other ways if they invested elsewhere.
Why do you think people are so cautious? Because I completely understand if we were sitting here talking in 2008, 2009, 2010, but we've had more than 5 years of stock market rally in this country. We've got economic growth. I mean, I know an election year is always uncertain, but there's been positive news around for half a decade now.
Yes.
So why are people still having that mental block?
I wonder slightly whether it's about people's understanding of the wider investment market and the opportunities that exist. So I suppose it really comes down in a large part to education. A lot of people either don't have savings at all. Clearly, they're not the people perhaps we're referring to immediately. But I think generally the level of understanding of markets in the country is perhaps lower than it should be. And I think that is probably a direct corollary. People understand cash and they understand residential property. They understand where they have the roof over their heads. But those are very different, I think, from the opportunities that exist.
And so whose responsibility is it to educate those individuals? Is it yours? Is it ours in the media? Is it the government's?
I think collectively it's everybody's. This is a very big issue. I mean, clearly the journey for investors is starting at an earlier and earlier age. People do need to provide for themselves in retirement. But even way ahead of that, I think starting in schools, etc., with financial education is an absolutely key move. And I think that's a good start. But we still have lots of people in the middle who either don't have financial advisors, they are not part of the advice process, and they didn't learn about this sort of thing at school. So I think it is increasingly incumbent on all of us to help the great British public with their understanding of the investment markets.
Simon, thank you very much.
You're welcome.
This is Emma Wolf from Morningstar. Thank you for watching.